Good morning. Welcome to IG's early morning call. It's Friday, 28th of July. Let's take a look at the headlines as we wait the start of today's European markets, where we're expecting a mixed start to the trading day ahead. But overnight, we got some interesting moves on the foreign exchange markets, where we got the Japanese yen on the way up after we see the Bank of Japan start that long path back to tightening monetary policy with a tweak on its yield curve control. At the same time, we've got the Aussie down across the board against a number of currencies as a result of further weak data coming through today. It's retail sales, in as much as we've got the currency markets covered. We've got the corporate news covered as well. Today it's the banking sector in focus. NatWest coming through with what looks like some pretty good numbers. Standard Chartered also out with figures this morning. And Intel posting a surprise profit warning. A surprise profit. The warning comes from artificial intelligence, where it says it remains a challenge. Broadly speaking, stock up on some good numbers from the chip maker. Take a look at volatility. After yesterday's rise off the lows, in fact, yesterday we did see an intraday print below the 15.1, which then took us down to levels that we've not seen in some considerable time. Just quickly wind the clock back to show you what happened. In yesterday's session, we took you down to new levels not seen since the 21st of January 2020, which, when volatility drops like that, it means that the markets don't offer the same opportunity for us traders as they would otherwise. And then all of a sudden came a snapback. We saw certainly Wall Street on the way down yesterday, as we'll just see in just a moment's time. Today, we've got a little bit of money off the table, in other words, weakening again, but broadly speaking, holding on to much of what we saw on the upside yesterday. Now, let's quickly run through some of the numbers. I want to begin with Germany, because yesterday we saw a new all-time intraday record high for the German DAX. It peaked above this level at 16,430. Just for the record, just to show you what it was, 16,448.4. That was intraday in yesterday's session. We're looking for a stronger start to the trading day today. That previous line of the previous record high was from the 16th of June. But if you look at the long-term picture, you can see the way in which the markets have attacked this record high. This is going back to the early 1970s for the German DAX, and you can see the way in which the markets have tried again to get to these new highs. And we saw a new high, of course, back in November 2021, and another one back at the beginning of 2022 before that pullback. And when we saw the pullback, what was that, in March this year, there were many, myself included, penciling in a drop all the way down to those lows we saw back in October 22 at 11,800, but none of it. The markets have surprised many of us. And this is the lesson to be learned in terms of risk control, making sure that your stop loss goes in the right place so that you can mitigate any losses. But for those that have been long, all credit to you, and a record high yesterday for the German DAX. Now, London's FTSE 100, we haven't covered that yet. Yesterday, we saw a new high not seen there since the 24th of May, and then came a pullback. Today, we're now looking for gains on the markets here in London, 76.86, and the French CAC 40, like the German markets yesterday, peaking up at recent highs, and we're building on that today with a stronger start expected at the beginning of the French CAC 40 trade today. Overnight in Asia, I want to quickly talk about what's been happening in Japan. We've got a drop there of just over half of 1% for the Nikkei 225. In Japan, Toyota Motors sold 5.1% more vehicles in the first half of 2023 compared to the same period of last year, helped by the easing of the semiconductor supply constraints. Toyota's sales in Japan jumped 33.2%. Stock is up in today's session, although we got a drop for the Nikkei 225, which has really been as much as the strengthening of the Japanese yen as much as anything else, which we'll take a look at because of that change in yield control from the central bank. Global sales of hybrid electric vehicles in Toyota grew 37.6% year on year. Hang Seng Stock Index up 1.25%, you can see there. Now let's take a look at what's been happening on the US markets. As at the close last night, we saw losses across the board, and they were fairly evenly spread as well. Remember yesterday, I was talking about the 13th day in a row of gains for the Dow, which was a record. And indeed, if you look at this chart here, this is the Dow Jones Industrial Average. Yesterday, intraday, it peaked above the 35,640, which had been the previous high that we'd had. And that took us up to levels then and seen since the 10th of February 2022. And then came the pullback. Now, this is one of the reasons why we saw an uptick in volatility yesterday, because we saw declines across the board on the US markets. We have seen a mixed bag of results actually late last night. We'll take a look at all those in just a few moments' time. That's the Wall Street benchmark Dow Jones Industrial Average. Same sort of price action we saw on the NASDAQ. And as we've seen a drop of around about 2/3 of 1% on the cash session yesterday. 24-hour markets closing down at 15,550. We've now got, I beg your pardon, 530. We then came to this trading day today where we've got a small green candle, which means we're holding on now to the position we're at. This, for me, still is showing gains across the board on the longer term picture. And I don't think that's likely to change. I think the markets that we've got, let me just quickly draw that support line up there, which you've got a number of touches on that, which gives us this upward trend. We do have the pullbacks. We've seen pullbacks across the board. It's a little bit like a series of steps going up with small pullbacks and then a trajectory on forward. I don't see any change in that. I'd want to see a print below this level down here at around about the 142.90 level for me to change my longer term view that we haven't got this NASDAQ continuing to see higher highs. Despite the fact we've got the momentum on the way down, it certainly looks like people are looking for reasons to sell this, but quite frankly, they're not getting them. And we're seeing the NASDAQ hold on to this long-term trend. As expected, the Bank of Japan left interest rates at ultra-low levels of a negative 0.1%, but there was a tweak to their ultra-loose monetary policy. Now, the short-term interest rate target remains at that negative 0.1%, the 10-year government bond yield around about flat. But the bank took steps today in its statement to make its yield curve control policy more flexible. It maintained guidance allowing the 10-year yield to move up 0.5% and down each around the flat target, but changed the terminology, talking about references rather than rigid limits. Now, this has seen some movements in the Japanese yen in today's session. I want to show you what's been happening today because we've got almost now a total move down from, I was looking at this fib taking us back up to 142.09, and we got that resistance level holding beautifully, and we're now on the way back down here now to this target of 137.26. There's a little bit of buying at the moment for the dollar against that slightly stronger Japanese yen in today's session. The Bank of Japan also said it'll offer to buy 10-year Japanese government bonds, JGBs, at 1% in fixed rate options instead of the previous rate of half of 1%. So the broad message is here from the Bank of Japan. We're keeping rates on hold, but we're beginning to set out on that path where we can achieve some tighter monetary control. And as a result of that, in today, we saw this new recent lower low for the dollar against that slightly stronger Japanese yen. As I say, there's a small reversal of that at the moment. But broadly speaking, this is beginning out on that new path. The Australian dollar is down against a whole basket of mature economy currencies today after economic data shows more weakening across the Australian economy after a series of interest rate rises has put a lot of strains and stresses on the Australian economy. Let's take a look at the figures we got out today for the retail sales data. Unexpectedly fell by a margin of 0.8% in June, month on month, compared with the market estimate of a reading of flat. Now, this was the second time a drop in retail trade so far this year as cost of living pressures continue to weigh on consumer spending. Like in a lot of economies, we've got high inflation remaining. Let's take a look at what's been happening. We've got a short trade across the board for the Aussie today. And in fact, in today's session, we've gone below the 76.4% retracement on this fib here. Now, when you talk about technical analysis, you can obviously draw your lines any way you want. But in fact, what I'm going to do is I'm going to move this down here because I think this is more representative of what we've been seeing here. And this is going to be another attack on this level of support down here at 66.24. Now, the other thing to watch out for if we take the fib off on this is that we've got this double top pattern here. When you trade a double top pattern and you get a projection down, I want to highlight where that is exactly. It's there with that double top, and you've got this reversal now. This is a keen line of support to watch out for at 65.97. With this weakening Australian dollar, We know from the recent tonality from the Fed that we've got more interest rate rises to come in the States. Expectations are now that the Australian Central Bank could now be done. Now, if you think that that double top pattern is going to succeed, you draw a line there, copy that, and when it breaks down here, you've then got your new projection, your new line to watch out for, which is there, which coincides pretty much with the lows we saw back on the 7th of November 2022. So the way to trade this is to, if you haven't already opened a position on the short on this, if you've got a short, obviously you want to continue to bring your stop loss in to keep the profits locked in. I would wait until you get a candle close below the 65.97 down here. You get a candle close below there. That's then your new price target down here at 63.14. It's not just against the US dollar. We've got the Aussie down. It's against other mature currencies as well. The Aussie down heavily in today's trade, down at 60.57 against the euro. And in fact, you can tell because we haven't got much of a wick at the bottom here. In fact, this is a Marabuzu candle indicating there's pretty much one direction of travel, and that's on the way down. We don't seem to have any buyers at this level down here. And 60.58, your price target is 60.22. And then if you get a break of that, you're then down to this new level down here. And also against the Japanese yen, there's a very close correlation between the Australian and the Japanese economies because they work in part together on various things. Japan is a big importer of raw materials, which comes from Australia. We got the Aussie down against that stronger Japanese yen as well. And in fact, we've hit the 200-day moving average in today's session down at 92.01, which is the 76.4% fib retracement. Then came the bounce. Now, my expectation is potentially here that we could well get some, if we see this line holding here at 92.01, which looks at the moment at least to be the case, then there's a possibility, I think, going to next week, we could well be buying the Aussie against the Japanese yen, but we'll have to see how things develop. But the broad sweep of things is that the Aussie is down against a whole basket of currencies in today's session because of the weaker economic data coming through in the Australian economy. Now, talking about the economies, we've seen some good numbers coming out from the French GDP numbers this morning. In fact, a far better than expected print in terms of strength for GDP. The French economy managed to grow what we've seen here is a significant amount, certainly more than expected. The eurozone's second biggest economy, growing 0.5% in the 3 months through to the end of June, expanding a revised 0.1% in the first quarter. Expectations were for a number to remain at that low 0.1%. I want to show you what's been happening on the euro-dollar trade, because if you look at what's been going on, let's take a look at the 10-minute candle. You can quite clearly see here, this candle here, which is where that release of that data was, that hammer candle, and that took us back up. It's not a massive move, but it was a positive move for the euro trading against the US dollar. Want to keep this euro-dollar trade in mind, where we're seeing support at the 109.38, which is the 76.4% retracement. Today, we've got GDP in Germany as well, the economy. This is the biggest economy, of course, in the eurozone, currently in technical recession with negative growth or contraction in the fourth quarter of last year and the first quarter of this year. It's expected to have come out of that with an expansion of 0.1%. Then later on today, we get consumer prices. The pace of inflation expected to see a deceleration to 6.2% in July year on year after 6.4% in the previous month. Down, but still at amazingly elevated levels when you consider that the European Central Bank maintains that 2%, around 2% target. Over in the US at 1:30 p.m. today, core PCE price index growth forecast to ease to 0.2% in July month on month after 0.3% reading in the previous month. Year on year is anticipated to fall to 6.2%. Again, that's a Fed measurement of inflation. Now, let's switch the gears into corporate mode. And I want to take a look, first of all, at what's happening in NatWest. Of course, all the headwinds facing the NatWest board this week. I won't go into details of that, but I think broadly speaking this morning, we've got some better than expected numbers coming out from the company today. Its first half profit figure today. NatWest reported pre-tax profits of £3.6 billion compared to £2.6 billion in the prior year, and above the £3.3 billion average of analyst forecasts compiled by the bank. Now, you can see here the liquidity coverage ratio. This is the LCR, 141%, representing 45.3 billion sterling in headroom above the 100% minimum requirement. That means that the board have pushed a lot of cash into this area of the balance sheet. This is up by 2 percentage points compared with Q1 2023, primarily due to increased wholesale funding and the asset sales of UBIDAC. That's been offset by capital distributions. We've seen NatWest buying stock back in the market. There's a dividend to pay. Bank also announcing an interim dividend, this time around of 5.5 pence per share, and announcing another share buyback of up to £500 million the second half of the year. So I think things looking, broadly speaking, pretty good for NatWest at the start today. As I said, there are some headwinds which those invested in NatWest didn't want to see. I have to say, actually, NatWest, I think this week has been the second most shorted stock on the FTSE 100, or the FTSE All Share, I think. And you look at number one, which is Ocado. This yesterday came down to the line of support I had drawn on here from the lows we had back on the 20th of March. We have been lower than that recently, but this drop, I think, has now possibly run its course. That being said, if there is further pressure on NatWest board, and we do still see pressure developing around the chairman, Howard Davis, to potentially resign as a result of what's happened, because he backed Alison Rose, who has subsequently left, as we know. So there will be still headwinds, but I think if you are long on this at 237, your stock goes down here at around about the 225 level, with a view potentially to seeing some of the negativity ease back today because of the good figures out today from NatWest. Standard Chartered's another one, posting an underlying pre-tax profit of $3.3 billion, up 29% constant currency rates. Bank also announcing a $1 billion share buyback plan. Rising rates and record financial market business propelled its margins. I want to show you what's happening here in London. The stock is down the last couple of days or so, down at 708.9 pence. If we look at this chart here, now this is the London listed stock. What we have as a benefit is that we do have Standard Chartered trading on the Hong Kong markets, which we can get a reading of what's been happening there. If I can find the Hong Kong shares, there we go. That stock was up just by a margin of 0.03% today. So potentially we see an unwind of some of what we saw in the negativity in the last couple of days at Standard Chartered when things get underway a little bit later on for the European markets. AstraZeneca, meanwhile, beating expectations for its second quarter profit, helped by better than expected sales of its oncology drugs. This is the share price chart for AstraZeneca. We've seen some gains recently, taking us up to 107.09. Potentially there is some upside to go here. If you are long on this, stop goes underneath the £106 level, with a view to taking that up on the session in today's trade. Let's take a look at British Airways owner IAG as well. Quarterly profit beating forecasts by a margin of 40%. Said it was encouraged by the outlook for the summer as demand for leisure travels remains strong. The problem is for these airlines is that there is a lot of competition to get people in the air, to get them flying, to get them abroad. And of course, the big carriers such as British Airways and Air France KLM have expenses in the longer pitched travel, and they can't see the benefits of the discount airlines across Europe, which really do take the lion's share of the business, which is where a lot of the frequent flyer and a lot of the income comes through from. I want to show you what's happening. Let's get British Airways, or IAG, up on the screen for you here. This is the stock. It's up yesterday for a second day in a row, but these are looking good numbers out this morning. Let's stay on the chart because I want to bring up Air France KLM. Again, this stock bouncing off the 200-day moving average in the last couple of days. It's reported a bigger than expected quarterly earnings figure, boosted by an increase in the number of passengers carried between April and June. And it says operating profits will increase over the summer because of the extra numbers of people it's expected to fly to take people to holiday destinations. Staying on the charts again, I want to take a look at what's happening in the pharmaceutical sector again. This is the French drug company Sanofi. French drug maker increasing its guidance of full-year earnings on strong sales of its anti-inflammatory treatment, Dupixent, and promising new drug launches. I have to confess, I don't know what that is. The Paris-based drug maker predicted an increase in 2023, adjusted earnings per share by mid-single digits. Looking good at the start. We saw a rise yesterday at 97.73. If you're long on this, your stop again goes down below recent price action. I just put it below the candle we saw a couple of days ago, down at the 95 level. 97.73. If you're long on that, potential upside to go. There's some headwinds around about the €100 level. The big chip maker, Intel, rose 8.5% in extended trade on the IG platform late last night, all sessions, after posting a surprise profit in the second half of the year. Let's take a look at the figures. The company earning 13 cents a share. Analysts foresaw a loss of 4 cents Intel also forecasts third quarter earnings above Wall Street expectations. And over the past year, the PC market has tumbled as consumers equipped themselves during the pandemic, creating an inventory buildup. But the industry glut has started to ease, with PC shipments falling only 11.5% in the June quarter. This improvement in the PC market prompted Intel to forecast better margins for the third quarter. AI remains a challenge, though, for Intel shares and sales in the group's data center and artificial intelligence business, falling 15% to $4 billion. Let me show you what's happening happened as at the close last night on the chart. You can see quite clearly the benefit that we had in business last night, and it closed above the levels we'd seen previously, which has now taken us to levels on the market not seen since July 2022. For the current quarter, Intel forecast earnings per share of 20 cents. Analysts expected 16 cents, and the chipmaker benefiting from all that with that rise. Very strong gain. So we'll see a rise at the start of the day's trade, possibly by as much as 8% when we see things get underway later on the cash markets on Wall Street. Ford Motor has raised its guidance for 2023, along with a significant beat on its second quarter earnings. But as we'll see in just a minute, shares ended down on the session. Let's take a look at the figures as we saw them come through. Adjusted earnings per share, 72 cents against 55 cents expected. Automotive revenue, which is the lion's share of the business, up at 42.43 billion. We've been looking for 40.38. Strong pricing and demand from the automakers' trucks was the main motor behind the numbers. Company also increasing its fully adjusted earnings forecast to a range between $11 and $12 billion, up from the prior $9 to $11 billion. It also upped its expected adjusted free cash flow from $6 to $6.5 billion. But if we look at what happened on the markets in the session late in the trading day yesterday, the stock was on the way down. We're losing almost 1%, and in fact, at one point, despite the fact we saw a big rise in shares late last night on from those earnings, when the statement came through and people realized what was going on, shares falling because of losses in the electric vehicle section of the business. And the company says it wants to remain competitive, it wants to keep prices low, it wants more people to adopt Ford over other automakers to put a lot more Ford electric vehicles out onto the market. And they're paying the price, and shares ended down as a result. A few big names due to report today. Procter & Gamble is probably one of the bigger ones, expected to post earnings of $1.32 per share in the second quarter on revenues around about 20 billion. This reports earnings before the bell today. It's all sessions on the IG platform, so you can trade that. Also want to talk about ExxonMobil. Let's take a look at those numbers as well. The oil giant forecast to post earnings of $2.04 a share on revenues of 82.8 billion. This is a substantial drop compared to the same quarter this time last year. ExxonMobil then posted earnings per share of $4.14 on revenues of 115 billion. Remember, on Thursday, Shell and Total Energy earnings also halved compared to this time last year. So don't be too surprised about those figures coming through. We've also got Chevron as well. I won't go into details of Chevron because we saw details out last weekend highlighting what was expected this morning. It's another company was scheduled to report its full figures this morning, but we saw the move in the market late last week. Let's take a look at what's been happening with Brent. I want to show you Brent's chart first of all. We've got a peak above recent highs. Yesterday, the intraday high took us up to levels not seen since the 19th of April. Tonight, Baker Hughes rig count. Last week, we saw the total number of active drilling rigs in the States fall by 6, taking the total rig count down to 669. In terms of the detail, oil rigs falling by 7 to 530, down 91 so far in 2023. Gas rigs down 2 to 131, a loss of 25 active gas rigs from the start of the year. Just returning to the charts and soaking up one other area of the market, this is gold, holding pretty much all of yesterday's losses. That's it from me. We're back at 10:30 with charting the markets. So do watch out for those European stocks to watch at the start of the day's trade. My pick of the morning, I think, is almost certainly going to be NatWest Group. I think easing back into some of the losses that we've seen this week on what looks like pretty good numbers. That's it. Back at 10:30 with charting the markets.